Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. We're going to take a look at the Aussie versus US dollar. We'll start by taking a look at the daily chart and what you see this yellow area right here. This yellow area is defined by a number of different swing levels going all the way back to, September 2022. It was a ceiling through here. Spent a month and a half below that level, and then we moved above and started to use this level as a support here before moving to the upside. When we moved back to the downside, where we find support right within that area right through here, and then moved higher again, and then came back down to the level again, found support here, moved back higher, and in the month of end of May, the market fell below this level and tried to extend to the downside, reaching our low for the year at 0.64587, but then moved back above the level and moved all the way to the upside again, back down to the swing area, back down to the swing area. And in the month of August, we're seeing price action above and below the swing area over the last 6 or 7 or so trading days. So there is some apprehension, but as you can see, the price is below the low of that swing area and below the 61.8% retracement of the move up from the low of 2022 to the high of 2023. The level comes in at 0.65468. So stay below that level is more bearish on the daily chart here for the Aussie versus US dollar. If I were to put a wide risk level on this, it would be 0.6595. Stay below this this yellow area, and the sellers remain more in control. We can hope for further downside potential with the low price for the month of August and the low price for the year as the next key targets before we rotate back to the downside. So that's the daily view from this currency pair. Let's take a look at the hourly view and see what that is telling us. And if you look at the hourly view, we've had a lot of different occasions where the price moved above the 100-hour moving average. It's one of our barometers for bullish above and bearish below. And you can see over the last few days that the price has moved above it, moved above it, moved above it, moved above it, again and again and again. But each time the momentum faded, certainly ahead of the green line, which represents our 200-hour moving average. Price has not been above that level since July 27th. So there is a reluctance to go higher, but there has been some price action above the 100-hour moving average, which gives the buyers some hope. We are currently below that 100-hour moving average, however, and that is giving the pair more of a bearish bias. Here is at 0.65468 level, the 61.8% retracement from the daily chart, and the price has been trading above and below that level over the last few days as well. Trying to hold support against it, then trying to hold resistance, and you can see how we've moved back and forth above and below that level right there. So it's sort of key as well. So going forward, as long as the price remains below these levels, the sellers remain in more control. If we start to move above them, then things start to turn around for the Aussie versus US dollar. But right now, sellers are in charge. On the downside, we need to get below the low price from August 2nd and below the low price from August 8th. Get below that level, the sellers will add to their control, and we should see further downside momentum in this currency pair. So there you have it, a look at the Aussie versus US dollar from a daily and an hourly perspective. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.